we've seen 14.3 million ounces transferred by JP Morgan into the registered category. Now, some people would say, well, that's silver for sale. They're trying to drown the market. First of all, they only have about that much left in the registered, in their eligible category that doesn't belong to SLV. They have like 134, something to the extent of 134 million ounces. I think that's about right, in their eligible category, of which over 100 million ounces supposedly belongs to, or 120 million belongs to SLV, which would then by extrapolation mean they only have 14 million ounces of their own left in their eligible category.
In the current financial market, significant developments are unfolding in the silver market, attracting the attention of both analysts and investors. Notably, major banks are adopting a net long position on silver, while substantial quantities of the metal are being moved into the registered category. This movement could potentially hold bullish implications for the market. The rationale behind this bullish sentiment is that if silver were to exit the Comex ecosystem, it could result in increased value due to reduced availability. Andy Schectman, CEO and president of Miles Franklin, has highlighted significant developments in the precious metals market. He points out that JP Morgan, a major player, has reorganized its silver holdings, primarily tied to investments like the SLV, potentially limiting direct sales. Concerns have arisen about JP Morgan's role in the SLV trust, exacerbated by allegations of precious metals futures manipulation. However, Schectman suggests that the reclassification of silver between categories may indicate substantial sales, yet it could signal strong demand and boost silver's value, particularly if it departs from the traditional trading system. Notably, JP Morgan's vault recently saw the transfer of 7.4 million ounces of silver to the registered category, possibly equivalent to 1480 contracts. This transfer, anticipated for sale during the upcoming September contract, might account for nearly 30% of ultimate deliveries, shedding light on the evolving dynamics. Andy postulates that these moves by banks may be a response to a potential scenario where silver prices surge, possibly driven by increasing global unpredictability. Looking ahead, experts forecast that silver could hit $30 by the close of 2024 and potentially rise to $40 by the end of 2025. This underscores the prevailing optimism about the future trajectory of silver prices in light of the current market dynamics. Just before you watch the Andy Schectman's interview and learn more about market trends, consider subscribing to our channel and give this video a big thumbs up.
Of course, Ted Butler will tell you that the billion plus ounces that they accumulated is all off balance sheet. However, the point is that people would say, well, they're dumping that kind of silver volume into the registered category, spiking the registered category. My viewpoint on it is that it has already been sold and someone is going to take possession of it. You have to move to registered in order to deliver. So, we have 9 or 10 BRICS locations around North America, the biggest being in BRICS New York City, JFK, which is the only Comex facility of our entire BRICS network. I have 2 clients there, both with over 1 million ounces and 1,000-ounce bars. That's eligible. They have been approved as a Comex eligible bar. They're assayed. If they want to sell them, they got to go to registered. Well, what if they already sold them and we arranged a deal for you, Don, again, to take possession of 1 million ounces of bars? In order to do that sale, they would have to be moved to the registered category. And then you would take possession of them, or they would go to your new account, eligible account. Anyways, that's pretty much how it works on a broad scale when you're talking about futures and about the prospect of taking delivery. So some people look at that as being bearish. I look at it as being bullish. I look at it, in my opinion, you'll see that spike very soon go right back down to where it was prior. And if it leaves the Comex ecosystem and does not stay in someone else's eligible category, but leaves, becomes exponentially more bullish. Over the past month, JP Morgan Chase has been steadily retracting borrowable shares of SLV to ensure they have sufficient physical silver on hand to meet delivery obligations for contracts. They only need to transfer the surplus silver acquired from retracting these SLV shares. Now think about it. What did I just say there? That they have been steadily retracting borrowable shares of SLV to ensure they have sufficient physical silver on hand to meet delivery obligations for contracts. Well, they just transferred 14 million ounces to registered. Is that a delivery obligation? I believe it is. And then it says they only need to transfer the surplus silver acquired from retracting the SLV shares. In other words, they take possession of the SLV shares and they can take possession of the silver that way if they want to. And it's called share redemption, and it's much more private than actually taking it off of SLV. Anyways, hence, as the delivery date grows near, JP Morgan Chase would make concerted efforts to shift silver into the registered category. Sound familiar? That's exactly what they're doing. They are taking that silver that they in the form of retracted SLV shares, they're taking the bars behind it and moving it into a registered category, and I believe someone is going to take possession of it. And if it's already been done and someone is taking possession of it and it leaves the ecosystem, it becomes exponentially more bullish. And that is simply this, that the silver is leaving the exchanges, that the silver is being accumulated rapidly. And to put it all into context and put a bow around it, where are the commercial banks positioned right now? Oh yeah, net long. Commercial banks are net long in the futures market. Are they expecting something big? Are they expecting a price explosion? Maybe they are. Sure seems like it could logically happen against the backdrop of a world that seems to be spinning out of control faster and faster and faster and faster. And I do believe this is what they are looking for. They're going to cull the regional banks. And when the next one gets bailed in, when the majority of the public has no clue what a bail-in is, wait until you see what happens to the availability of gold and silver in this industry when finally people say, oh my goodness, where do I go?
Andy emphasizes the significance of new BRICS members like UAE, Iran, and Saudi Arabia due to their substantial oil production capacities, augmenting the group's influence with critical global resources. China's president, Xi Jinping, labels the BRICS expansion as historic, highlighting its potential to amplify the global South's voice in world affairs. This resonates with shifting international dynamics, emphasizing evolving geopolitics. In line with these shifts, Andy points out a noteworthy example of China's involvement in Iran's development. Iran's reliance on China has grown notably, particularly in navigating critical challenges such as diplomatic isolation, regional tensions, and economic instability. Notably, in March 2023, China, as Iran's largest trade partner, played a pivotal role in brokering an agreement between Iran and Saudi Arabia. The restoration of diplomatic ties after a 7-year hiatus exemplified Beijing's expanding influence and vested interest in Iran's affairs. Let's get back to the interview.
The key developments were, of course, the 6 new members being Argentina, Ethiopia, Egypt, the United Arab Emirates, Iran, and Saudi Arabia. And, you know, especially when you talk about UAE, Iran, and Saudi Arabia, you're talking what it amounts to 80% of the world's oil production and, you know, in the BRICS sphere of influence. And you're talking the majority of commodities that are mined around the world or accumulated over the world are in the BRICS sphere of influence. And that's something that I think should not be taken for granted. If you're going to build a sphere of influence, if you're going to build this new ecosystem, I think you start with the energy situation. And I believe the probability of the BRICS nations eventually pegging their new currency or their new settlement currency to a form of something stable like gold or commodities using distributed ledger technology, that's coming. But look at the pieces that are happening along the way. Just in the last few months, we noticed that the U.S. Treasury holdings of Saudi Arabia are at a 6-year low right now. And the cumulative selling of debt is growing and growing and growing. The United Arab Emirates just sold $4 billion worth of treasuries. These countries that have traditionally been Western friendly, that are recycling their profits for selling us their oil in treasuries is dwindling. A Chinese firm has secured a contract from Iran to upgrade its major international airport. But wait till you hear how they're paying for this done. Again, Iran was awarded a $2.7 billion airport project to their biggest airport to modernize it to a Chinese contractor. The company has been selected to carry out the project after intensive negotiations with several domestic and international contractors, he said. However, Iran will pay for the project using a barter mechanism that allows swapping crude oil for financial resources, equipment, and technical services. Do you see subversion of the US dollar? Do you see how they are doing the workaround? Little by little by little by little, we are removing the settlement status of the dollar. And as more and more and more things settle outside the dollar, what does that do for the reserve status? And as these countries sell their bonds, as we just mentioned, they're selling bonds, which is what makes the dollar the reserve, right? But on top of it, they're settling outside the dollar. But this is nothing new because Chinese firms have been helping Iran develop their oil fields, as an example, after the Japanese and the European companies pulled out of the country due to the sanctions over Iran's nuclear program. Here again, sanctions, coercion, being hypocritical, being a bully. It's okay for us to sanction Iran for whatever reason we deem necessary, but when we go into Iraq and destroy it, and under the guise of weapons of mass destruction, don't find it, say we're sorry, there's no ramifications for us. What Iraq is not real happy about that, by the way, as they just made it illegal for businesses to trade in dollars, go to prison for it and lose your business. So when you see the fact that China has not gotten involved in these sanctions, they're doing things in terms of mutual cooperation. Yeah, and maybe it's to their advantage, but so what? They're smart to stay out of everyone's business and to instead cooperate to build a better life for both parties rather than go in there and say, no, you're out.
As these intricate developments shape the financial landscape, silver's trajectory and global dynamics remain captivating topics. How might these shifts impact investor strategies, particularly in light of the repositioning of major banks and the evolving role of precious metals within global systems? Share your thoughts in the comment section. If you liked the video, don't forget to subscribe to our channel and tap the bell icon so you don't miss out on our upcoming content. Surprisingly, around 87% of our viewers haven't subscribed yet. We're aiming to reach 3,000 subscribers in the next 2 weeks, and your support could make a big difference. Thank you for being a part of our community.